I'm Diego Sanchez, president of HousingWire, and this is a special 20-minute talk. My guests today are Adam Carmel, founder and CEO of Polly, and Logan Mohtashami, lead analyst for HousingWire. Adam and Logan, so great to have you both on the show.
Likewise, thanks for having us.
Pleasure to be here.
All right, so before we dive in, could you each give a 60-second introduction? And let's start with Adam.
Sure. My name is Adam Carmel. I'm the founder and CEO of Polly, mortgage software company that's focused on building the mortgage industry's first vertically integrated capital market solution.
And my name is Logan Mohtashami, lead analyst for HousingWire. And my job is to basically provide the most up-to-date, current, factual information, not just on the housing market, but also in the U.S. economy, and just destroy as many American bears while I'm alive.
And also provide the best hair in housing. Love the dude
true.
Today.
That's you. Good choice on putting a cap on versus me today.
Hard to compete with that hair, Logan.
It really is. All right, so let's jump right in. Adam, you're a former mortgage lender CEO. Why did you decide to launch a mortgage tech company, and why the focus on product and pricing technology?
Sure. So in my experience, which was more than 10 years working within or operating an independent mortgage company, I developed this thesis that in order to scale that business, you had to achieve one of two things, ideally both, which is to drive down the cost of origination and have a unique advantage in the configuration of your margins and your LLPAs and so forth, delivering price to the loan officer community. And so we were power users of, at the time, the largest pricing engine in the market. And it was inadequate for our needs and to achieve what I was looking to achieve under that thesis. And so we built our own pricing engine within this mortgage business, and we saw unbelievable ROI and value. Fast forward that was in 2015-16. Fast forward a couple of years later, I ran an exhaustive analysis around all available pricing engines and capital market solutions in the mortgage industry at that time. This was 2018-19, and determined that there was a huge opportunity to deliver unlimited granularity, flexibility, and configurability across the capital markets category, and thought that by doing so, we could democratize all of this ROI, this automation, being able to price each loan on a loan level basis, analytics and other kind of machine learning tools and so forth. And I got very motivated to then start Polly, and that was in 2019.
All right, let's stay with you for a moment. I'm really excited that you and I and our companies are working together to launch a new mortgage rate center on HousingWire that will include real-time rates updated on an hourly basis during market hours, which is an incredible differentiator from what else is out there for this audience. What data are we using to generate these real-time rates? And why do you think real-time rates are a game changer for the HousingWire audience?
Sure. So, as Polly has grown significantly over the last several years, we've had the good fortune of partnering with lenders and banks and credit unions of all walks and sizes. And so we have this now kind of unique data advantage to understand and synthesize where mortgage pricing is across any number, really an unlimited number of parameters. And so that's the source of the data. Now, in terms of real time, we can go as real time as anyone wants. Hourly is great. And there's huge advantage there, because if you're a loan officer or a mortgage broker or someone at a lending company, you really want to understand what's going on in the market quickly. And using stale data when the mortgage market is moving up and down in real time, like literally every second. If you don't have a price that matches what's actually happening within, say, an hour, then the price itself is effectively irrelevant. And to be able to partner with HousingWire, who I've grown over the last many, many, many years to have a tremendous amount of respect for, and to be able to partner with y'all is nothing short of humbling, really.
It's amazing. And Logan, I want to bring you in because you're a former LO yourself, and you're also our current lead analyst for HousingWire. Why do you think it's important for the housing professional to have access to real-time rates in this housing market?
Many, many years ago, when I was a kid, we used to get fact sheets on rates, and things used to move much slower. We used to use something called paper. In this day and age, everything moves like this. And you can lose business or gain business within a 5 to 10 minute period if you do not have the ability to track real-time data and rates. Because as we all can see what's happened in the last 3 or 4 years, the 10-year yield can move up and down like this, and pricing can change faster and quicker. But everyone is working at kind of the same speed. So if you want to be old and slow and be behind the curve, then you know what you're doing. You're not keeping in touch with everything. So advantage, disadvantage, if you want to come into the 21st century, you need a product like this to, give yourself the advantage that other people might not have. And in this day and age, everything's cutthroat. You got to get in there, you got to get the information, you got to get the data, you got to move as fast as the market does, because nobody's going to wait for you.
Nobody is going to wait for you, and you don't want to be old and slow like the Fed, right?
No, you do not want to be old and slow like a Fed.
All right, so Adam, we've had a mortgage rate center on the HousingWire site for a while, but this is the first time we're partnering with Polly on the page. What's your vision for how this page develops over the next few years?
Going to what Logan said, the more real time it is, the better. The more transparent it is, the better. The more data we can provide collectively, the better. And I think also we at least from Polly, and I know HousingWire shares this vision, we really want this to be a mechanism and a tool that is not just information that can be consumed, but that can be actioned. And HousingWire is the preeminent service in the space, and we want to be able to empower your audience to make real-time, informed, and actionable decisions. And so as we look out towards the future, I think that involves more data, more analytics, more trends, a more comprehensive product that the industry writ large is able to action and use as a mechanism of growth.
All right, so let's tap into some of the mortgage rates expertise and housing market expertise that we have in this conversation. We've seen mortgage rates head back up a little bit recently after a really rapid decline from over 8% to the mid sixes. I read recently that Fannie Mae thinks that rates will be under 6% by the end of the year. What do the two of you think, starting with Logan?
I'm a 10-year yield guy. So the 10-year yield went from 5% all the way down to 4.080. And that is a key technical level. And we bounced off of it. But also 4.25 is my kind of peak. What's happened so far this year is the spreads have gotten a little bit better. So the 7.25 peak rate that I was looking for this year won't happen if we get there on the 10-year yield. So the spreads are getting better, but the economic data is staying firm. Jobless claims are low. Manufacturing data just beat today. So the 10-year yield is getting closer to the upper range. Economic data has to get weaker. Remember, paper, rock, scissors, labor data over inflation. Inflation data has already cooled down enough, but mortgage rates are still high. If the Federal Reserve chooses to be pro-housing again, we can get rates back down there. All we need is the spreads to get back to normal, and we're under 6% today. So there's a lot of things that could help mortgage rates go in the future, but we need a little bit more proactive Fed. We might have the government get Freddie and Fannie to buy mortgage-backed securities. These things can help. But right now, the economic data, again, the labor data is still firm enough, not breaking, to keep the 10-year yield up. So those are the things that I'm tracking every single day. And every single morning for the Mortgage Rate Center, I wait for all the big economic information to come out, and then I give people a heads up, a little short video on the page to give everyone an idea of what's happening today.
Adam, where do you come down on this?
First of all, I agree with everything Logan just said. But I want to just preface that there's like two types of economists in the world. There's the economists who don't know, and then there's the economists who don't know what they don't know. And so it's very hard to predict any of this, but I completely agree with what Logan just said. I think I'd add that in terms of data and historical reference, you have M2 that's actually deflationary, and M2 and inflation are very, very correlated. Never in the history of the Fed have they raised rates so quickly in such a compressed period of time, and what that means for the economy, the labor market, certainly inflation. Time will tell. Granted, there was a lot of slack in the market to start with. And maybe just lastly, I'd say that I agree completely with the spreads narrowing. That is happening in real time. The other major thing that's happening, lastly, that I would add is that there could be this case where quantitative tightening eases. And so if that happens while the Fed is backing off on rates, that's a huge thing for the mortgage market. So I definitely think we peaked the 10-year in the mortgage market. How quickly it goes down, I don't know. Where it lands, I have no idea. But I completely agree with Logan. I could see it south of 6.
Yes, the history of economic cycles, when the Federal Reserve or the market believes that they're done hiking rates, you usually get a big move lower in the 10-year yield and mortgage rates. We already saw that. So we're kind of in that second tier phase out there. And if the Fed does actually pursue this slowdown of QT and then maybe a complete stop, that is beneficial for everyone in the housing market.
Agreed.
Logan, you recently came out with your 2024 forecast. How do you think what happens with rates this year will impact inventory and prices?
We keep things simple. If demand rises and it picks up noticeably, traditionally speaking, inventory falls or stays flat. It doesn't actually rise. So the price cut percentage data that we saw last year, even when mortgage rates were heading to 8%, it was still negative year over year versus 2022 level. So we all have to remember 2022, abnormal year in housing. You're going to have to take that out of the historical context. So as of right now, demand is picking up. Inventory is picking up like it always does at this time. We typically have the inventory increase usually in March or April. That's not normal. New listings data is growing. Price cut percentages is falling. We're going to go below 2023 levels. So if everything stays constant, it's almost like a repeat of last year, except we shouldn't see rates get back up to 8%. So we follow the tracker data every week to give everyone a heads up of what the real-time data is telling us, because that real-time data looks out 30 to 90 days.
Adam, you've made a bunch of big hires recently. What's coming up for Polly in 2024? What's next for the company?
Great. Thanks for asking. So we are hyper focused on continuing to build the industry's best and most cutting edge pricing engine, certainly. And so we're not going to lose sight of that. Having said that, there are new products that are coming to market that we think, and we've heard and we've worked with and collaborated with our customers and prospective customers as partners on where else we can create value and real strong ROI that is complementary and adjacent to the pricing engine. And so we are really, really excited about introducing those new products to the market, while also frankly, doubling down on our investment within the pricing engine vertical separately. So we're really, and so why have we gone ahead and continued to hire across the entire company and including at the executive level, is we remain hyper focused on our customer partner and listening and learning. And what are we listening and learning about? Well, they want more features, they want more products, and they want us to continue to solve the pain points they've experienced over the last decade or two that no one else has been able to solve for them. So we're going to stay focused in here and then introduce these new few products to the market this year.
Well, Adam and Logan, this has been awesome. Really appreciate both of you for joining me today. Have a great 2024.